Oil and gas companies have intensified their hunt for new deposits in long-term bet on demand as they reinvest some of the record profit from the fossil fuel price surge driven by the Ukraine war, according to data and industry executives. The exploration revival on the part of European majors in particular reflects a renewed commitment to oil and gas after Shell and BP went back on pledges to reduce output and invest in renewables as part of the energy transitions. In response to pressure from a majority of investors to maximize their oil and gas profit rather than invest in lower margin renewable energy businesses. It also defies protests from a minority of activist investors who want oil companies to be more closely aligned with global efforts to mitigate climate change. The renewed appetite for oil and gas reverse and production is an especially big turnaround for BP, which got rid of most staff from its exploration unit 3 years ago. Exploration is a long-term, high-risk business. Big-ticket offshore projects typically take 5 years to develop from discovery and at least another 10 years to return the initial investment. But as a source of profit, it has proved more reliable for energy majors than the very different business model of producing renewable energy. Upstream oil and gas have historically had returns of around 15–20%, while most renewables projects have delivered just 8%. And oil and gas price rally driven by energy producer Russia's presence in Ukraine translated into record profit for energy majors. That has increased confidence in most costly, high-risk offshore exploration that can also deliver the highest rewards. Offshore is experiencing a renaissance, oil-fueled services company SLB Chief Executive Olivier Lepointe said on June 21, leading industry data providers and consultancies endorse the view. The number of offshore drilling vessels used to explore and produce oil and gas recovered in May to pre-pandemic levels, rising by 45% from October 2020 lows. Analysis of data from oil services firm Baker Hughes showed. Wood Mackenzie, analysts predict a continued increase in activity, forecasting offshore exploration and drilling activity to grow by 20% by 2025. Already, the rise in drilling has helped to drive daily rate for leads and drills rigs to the highest level since the 2014 downturn when our commodity market crashed. Higher oil prices, the focus on energy security and deep water's emission advantages have supported deep water development and to some extent boost exploration, Wood Mackenzie analyst Leslie Cook said. The potential size of offshore deposit can ensure economies of scale, meaning less energy is used to extract each barrel, limiting emission. The International Energy Agency forecasts global upstream oil and gas investment are set to increase by around 11% to $528 billion in 2023, the highest level since 2015. Barclays expect the numbers of offshore projects to get approval this year will reach a 10-year high. Wood Mackenzie, meanwhile, predicts the commitment of up to $185 billion to develop 27 billion barrels of oil reserves, with international oil companies focused on the higher cost, higher return deep water development. It also anticipated the so-called Golden Triangle, U.S. Gulf of Mexico, Southern America, and West Africa, as well as part of the Mediterranean, will account for 25% of global floating rig demand through 2027, from Namibia to far-off eastern Canada. Now, activity extends beyond that core exploration territory. Namibia, which has yet to produce any oil and gas, has attracted strong interest after Shell and Total Energies made discovery off the coast of the Southern African country. Shell's head of upstream Zoe Yunovic said on June 14 that results from drilling tests so far were encouraging. Together with its partners Qatar Energy and Namibia's national oil company, Shell plans to drill 2 further wells in Namibia by the third quarter of this year, a document seen by Reuters shows. Shell has also applied for a license to drill another 10 exploration and appraisal wells there, the document also shows. Total Energies made an oil discovery in February 2022 in the Vanus well in Namibia's petroleum exploration license, PEL 56 for short, which analysts at Barclays estimate holds 3 billion barrels of oil equivalent, POE for short. Shell reported discoveries in the Graph, La Rola, and Junkers well in PEL 39, which together are estimated to hold 1.7 billion barrels of oil equivalent, according to Barclays. As it tries to reverse the decline in oil and gas output after it shifted to renewables, BP has turned to the Gulf of Mexico, far off the eastern coast of Canada, where it is ramping up oil exploration activity in frontier prospects.